Hey guys, welcome back to this channel. Hope you have a wonderful day. Today's video we're going to talk about 5 things to know when it comes to
investing. Because we invested on ETFs. We don't invest in particular stock. I think we still hold here and there, but 10 years ago.
Yeah.
We bought it more than 10 years ago. Anyway, still holding. I don't know how are they going because I forgot. I just remember I have some.
Yeah.
Anyway, investing. Things that you need to know. What is investing?
To me,
In share market, let's say.
To me, it's like the concept of it is like, okay, then I'm gonna buy something that I'm hoping that's gonna go up in value and are earning more.
Yeah.
That's the simple format of it.
Yes, you're buying. The first one is you're buying into a company, a share of it, a portion of it.
Yep. So in an instance of, okay, so a company XYZ at a certain dollar figure, let's say if it's $100 that they're selling their share price. So
$100 per share?
Per share, as an example. And you have $100, then that equivalent to, okay, one share.
One share.
Yeah, as an example of that. And let's say if tomorrow, for whatever reason, the company is going pretty good, and the share price now goes up to $110.
Yep.
So you're making
if
a
you
profit.
If you sell for that share, you make a profit of $10.
Correct.
But on the other hand, the
market can go back down.
The other way, if the company, the value of it going down to $98, then which means your share will down for $2.
That's it. So
you're just buying a portion
of
the company.
Yeah.
But the thing is, you just buying a share. You don't have control of it.
Yeah. So this is based on a share. Like a property is a different topic, and a business obviously a different topic.
Yeah.
But yeah, we're just going to cover, I guess,
on share market. Because we bought ETFs and some of the micro investments.
Yep, that cover up a lot of different companies.
Yes.
And that cover, I don't know how many.
Because we chose it because we just don't want to buy on one particular company.
Yeah.
Well, traditionally, buying big company, like for example, banks, eventually will go up, but then their share value is quite expensive.
Yep.
If you're buying a full price of one share, that may be $100, like what you said.
Yep.
Some of them feel $100, depends on which share you're buying. And you require quite a big capital for it and risk, because what if the company closed down in halts and stop trading, then you may have to lose all your money. You may eventually lose all the money eventually. But then for us, we buying ETFs is the whole basket of companies in there.
So based on, let's say, that example of that $100, so let's say if it's the ETF have a certain percentage of about 10 different companies at 10% each.
Yeah.
So
hypothetically,
so that means you're owning 10% of this, 10% of that, out of your $100, let's say.
Correct.
So, and understanding that the market do go up and down, at the time that this is being recorded, we have been hammered for about 3 months.
It's been up so much, and then now it's back to
nearly zero profit.
Yeah.
So that's the typical what happened in the market.
Yeah.
You've got no control of that.
No, you can't knock on the door. Company, can you please generate more profit, and then your company value will go up and my share price will go up, then I can sell it. No, you cannot do it. Unless you are the owner of the company, then you can change something.
Maybe. So, and that again, like when it goes up, yes, you can celebrate, and then you can sleep much better, and because you feel like you're winning and
you're making money.
You're making money, and your current position is actually a lot more compared to yesterday, let's say.
Yeah.
The other side of it, and when it goes down, it does feel a bit sour.
Yeah, demotivated. Did I make a bad choice or strategy and buying this market? Or if I didn't buy it, I would have saved the money and put it for a house deposit. Well, you never know. Still, for us, you only invest in whatever you can afford. Yeah, and those money are not emergency use.
Yeah, not in the short term. It's got to be a long term basis.
Mm-hmm.
Some of the, I guess, some of the ETF that we hold, they do pay dividends.
Yes, that's the next point about dividend. What is dividend?
So dividends, I guess, in a sense, like they actually pay you out or a certain percentage of profit. Let's say.
Yeah, they're sharing the profit.
Yeah. So there are two different types, I guess, like that we hold. Now, I didn't take a notice of this until recently. Some of them, let's say, with all the dividends, it's actually reinvested back to the business, let's say, or
I
to
think
the ETF.
Yeah, depends on what platform or your setting maybe.
Yeah, depending on the platform, depending on the setting, depending on what type of investing you're trying to do. We try not to take it out as much as we can.
Yeah, we're just trying to reinvest in that because
Correct.
of taking advantage of the compound interest.
Correct. And now we look at it, okay, then there's actually one other, like one of our platform actually pay out the dividends.
Yeah.
And I'm like, okay, why don't we have both?
Yeah.
So that's what, remember.
Well, but when you buying, there are some shares they pay dividend heavily. So it depends on your strategy. Some people like for capital growth, that's our current strategy.
Yep.
And
like
when
a big portion of it, let's say
majority,
80-90% of them is
capital growth. So not all of them got dividend, but when you receive dividends, in general, that market price for that share go down because you're paying out the profit and then the share price go down.
Yeah.
So that offset each other.
Correct. So for us, it's like, okay, then I don't need the money now.
I'd rather to invest in some company, they reinvest the profit back in there. So eventually they grow bigger.
So some,
but some shareholder, they like to receive dividend as a cash flow. In general, it's more maybe older generation, they rely on dividends.
So I guess like if you want to retire, let's say, and maybe that's part of your income stream. If you're retiring instead of having a job, that might be another way.
Correct.
So in the beginning for us, the dividends, like it's only a couple of pennies here and there. And
depends on because we invested in shares, they were not heavily paying dividends.
So
and we didn't invest enough.
Our portfolio at the moment is very small.
Yeah.
So our dividends is like pennies.
Yes, correct.
It's something that you can't even survive for a week. But if you grew that up, it get discouraging. It's like, a couple of dollars. The first dividends that I had ever received, it's like, somebody transferred this amount of money. It's like, it might be a mistake or something. Yeah. And then another one. I got excited. Remember that? It's like, hang on a second. How come this particular
from
account
that bank? Because you're using that bank for that dividend only. And
I realized, okay, so in the past year we're earning this amount. I'm like, okay, I just
have
have to
grow it. Yeah, but once
you
accumulate, it wasn't little, right? How much was it? 500?
Something like that.
1 year. So we had about $13,000 invested in a whole portfolio, few of the portfolio ETFs in there, and then you got 500 for a year. It's pretty good. Imagine people, they had 100,000 or higher, and they rely on the dividend as a cash flow. It will be really sweet.
So that's sort of our other avenue possibly in the future, and we're building to that because there is potential in there of maybe that's another stream of income. So now investing, to us, we look at it, it actually is for everyone.
It is for everyone.
Yeah.
Well, back then you will have excuse saying, you need at least $1,000 to invest.
You need to go to a broker. This is so complicated. I don't know where to go. This is for the old people.
Nowadays, they make it so simple. $1 you can invest.
Yeah, and then with a couple of tap here and there, you can actually experience what it feels like to owning a shareholder, and understanding how market fluctuate, goes up and down.
Yeah, you don't need a degree to learn about that. Everything's on the internet. Click on YouTube. People will tell you what is investing, share investing. Yes, exactly.
So for us, I learned so much just having a small amount in one platform over the past 12 months.
Yeah, I think when you first started and you're not comfortable or you're not getting much education, start really small and see how it goes first.
Yeah. Even if it's just, maybe like if it's $100 or, $10 or something like that, just pretend that, put a couple of zeros at the end. Your imagination and be like, okay, then so if I've only got $10, okay, all right, then just pretend it's 100,000.
Yeah.
And then what does it feel like when you have like 100 or $200,000-$300,000 in there?
Well, you magnify everything, so
correct.
your income will magnify or your
losses
because the market go up and down, right?
So, and that's how I see it. I look at it and go, oh, this is potentially it's going to go up. Oh, it's going to go up as in this is going to be our retirement or this is going to be our income. That's how I see it in the long term.
Yeah.
So, like anything, you build wealth, it's over time.
Yeah. There's no
rich
quick, unless you're winning lotto, and I don't suggest. I don't know, I read so many of these articles saying people winning lottery and they eventually divorce or not happy or something happened. You know why? Because they didn't know how to control the money.
And to build it over time and understanding.
Yes, they didn't have the experience. They didn't know how to control manage small money. Then they won't be able to manage a big lump sum of money.
Especially when you get a hit, big bang in one big lump sum.
Yeah.
So that's just our 2 cents, guys. Hopefully this information helped you in any way. Things to know when it comes to investing. Don't forget to subscribe, comment.
See you next time. Bye.
Bye.